Well, so the thing about that is the CPE requirement, because I'm also a New York CPA,
Yeah.
and it's 120 per 3 years, like when you do your license renewal, but you only need up to like 20 in a single individual
I
year.
might have to listen to some more of your podcasts.
So you really
I
think?
might have to please. I don't know. I mean, I moved from Georgia, so I was a Georgia CPA, and then
Okay.
I moved to New York. So I don't know.
How was that transfer process?
It was annoying, but it was like, I don't know, a while ago. A lot of paperwork,
Yeah.
but other than that, it was fine.
I got my accounting degree in Maryland, and then when I got to New York, I realized I was 3 credits shy of what New York required.
Yeah.
So I had to go back and take an online course at
Oh
LSU.
gosh.
Well, now I get to say I was an LSU
Yeah.
alumni. Go,
There you
go
go.
Tigers.
Go Clemson Tigers. That's where I went.
Yeah. So I thought that was kind of fun. And
Yeah, that is
then,
fun. There you go.
And I did it in forensic accounting, which was pretty cool. And it was self-study, so I was able to go at my own pace.
Oh, cool. Wait, where'd you go for undergrad again?
Mount St. Mary's University in Maryland.
Okay.
Yeah.
But then now you're also an LSU grad.
Yeah, so I like to milk it and say that I'm a little bit of both.
Yeah.
And then I also, when I worked at Long Island University, I started my doctoral program there.
Oh, wow.
So I was like, I'm
Doctorate of accounting?
Doctorate of information science.
Oh, wow.
Rather vague, right? I think I'd be like a pollster if I was an
Yeah.
information scientist.
That sounds like pretty relevant though for today's,
Yeah.
It's
It's fact checking too, kind
Yeah.
of. Which does check out for being an accountant, right? Doing
Yeah.
your due diligence, doing your professional skepticism.
Yeah.
Which, speaking of, did you listen to the any of the songs on the CPE music album?
I did.
Yes.
Big fan. I had it in
which
my
is your
Spotify.
favorite?
Oh gosh, putting me on this. I think there's like a balance sheet. There were a lot of puns on there that I
yeah.
liked. Ugh.
You know us accountants love puns.
Yeah, I know. What was it?
Valuation by the Balance Sheet Boys.
Yeah,
That's
I
a boy
love the
band.
Balance Sheet Boys. That was a good one. Yeah,
Yeah.
I like that. That was awesome.
Yeah. So, I mean, that's the making of the content that we were trying to kind of tap into. And I loved, one of my favorite things about doing that album was creating all the different cool names
Yeah.
of each of the different artists.
Yeah.
So like J. Close instead of J.
yeah.
Cole. We actually had outsourced the disco song. We had a woman who's like a professional disco singer sing that song. So that was really cool.
cool.
And I can only imagine what it was like for her to probably receive the lyrics. And she's like in Chicago or whatever. And
Yeah.
she's in the studio and she's like, I have to sing a song called Occurrence or whatever, you know.
Yeah.
And she's singing like this entire thing about checking invoices and
Oh my gosh.
making sure that the assets are right. And
That's funny. Where was that playlist when I was in Big Four? Like, we
Yeah.
could have had that playing in the audit room on repeat.
yeah, I have one of our editors working on right now a video which is going to be the top 10 accounting songs that have ever existed. So
I think all 10.
Yeah,
There you go.
we might have on there too. I'm curious some of my own throwbacks, you know.
Yeah,
do a
put
little
in some
shout
of
outs
your
to
like
myself.
raps and stuff.
Yeah, the old good oldies, right?
Yeah. Yeah.
I think one of my favorites is the money. I like the money song, and I like the debit and credit song.
Oh yeah.
Debits on the left, credits on the right.
Yeah.
Debits left, credits right.
I did. I have to keep playing. I did one listen through. And
Yeah.
it was awesome. I was definitely laughing at
Yeah.
the references and puns.
It's fun. So, I mean, obviously you're a pun queen of
Oh,
sorts,
yeah.
right? And so, well, how often are you ever doing, like, what's your comfort level going now in front of the camera from behind the camera, where a lot of the times meme account folks typically are like, I'm going to take a back seat. I'll have this little side lane.
Yeah.
But now, you know, kind of doing a little more stepping in front of the camera.
Well, it started as a place to just put all my puns. Like, I actually started Let's Get Fiscal as like a Twitter account where I tweeted like puns that came into my mind during busy season that like my friends and family were like, I'm tired of these jokes. And I was like, okay, there's got to be people out there that want to hear these jokes. So I just started tweeting these dumb jokes, and then like they started getting retweeted, and I was like, there are people out there like me that like these really dumb jokes. And then it turned into the Instagram. But at that time I was working at Deloitte.
Yeah.
And I am like not a risk taker, and I was afraid I'd get in trouble or something, even though it was very innocent jokes and everything. So I kind of kept it a secret until I left Deloitte. And then I like was like, you know, whatever. It's more fun for it not to be a secret. I started telling people about my account, and they thought it was cool. So I just came out with it. Yeah.
What's your take on like the Twitter world versus the Instagram world? Or was that like a straight transition? Or because I know there's like an active, I mean, the Twitter community is kind of very active, just like the Reddit community.
I've stopped tweeting as much. I feel like I used to be like Travis Kelce. I was like, I saw a squirrel today, LOL. Like my tweets 10 years ago are really like stupid.
Yeah.
And then I transformed into more of an Instagram girl, and now I'm more like kind of still mostly Instagram, not much Twitter. And some TikTok. I did a little TikTok dabbling, and I got to get back into that. That was fun.
So I like to start off the show often with a pun of sorts, right? As we segue into the main section. So this is a little joke that I sometimes I use artificial intelligence to help me out. Sometimes it involves tweaking, and it's always a good test to see like how is AI so far at being funny.
Yeah.
And a lot of the times it's not really the funniest, but it's cheesy at least.
Yeah.
So why can't you explain accounting memes to non-accounting friends?
Why can't I explain accounting memes? They don't get it.
They just don't see the asset in them.
Oh, I like that.
Yeah.
Oh, that's a good one.
So there you go. As cheesy
Yeah.
as it gets with it, but that's how I like to
Yeah.
start things off. And with that being said, we'll cue the intro animation. Let's get flowing.
Yay, let's do it.
You are now entering Fintech Flo.
All right, everybody, welcome to the Fintech Flo. This is episode 39, another New York City special episode here. I'm enjoying getting to bounce back and forth between the LA new podcast facility that we have there, which if you're ever out in LA, you have to see that. I mean, it's magnificent. They did an amazing job with the construction and the design. And I kind of am liking the evolution of the show, too, to kind of spotlight different leaders in the space. So as for myself, of course, everybody knows I'm Drew Carrick, the rapping CPA, Petty Cash. So why don't you introduce yourself here?
Yeah, well, I'm Kristen Gayoso. I am, you might know me from my meme account, Let's Get Fiscal, Kristen from Accounting, The Accounting Batch, Big Four Confessions. I have a bunch of different outlets for dumb accounting jokes.
So obviously Let's Get Fiscal was the first one, right? Mm-hmm. So what was the stimulation behind the iterations between a few after that?
So I started with Let's Get Fiscal. That was my Twitter where I tweeted really dumb puns, and I just noticed like, oh, I got a lot of retweets today, and this was supposed to be my own pun diary, and it just kind of caught up, and then I was like, let me expand. So then I was like, oh, let me make the Accounting Batch, and kind of like, I don't know, this one will be more girly, this one will be more financy, and then I expanded into Big Four Confessions because people were telling me all their horror stories working in public accounting or kind of scandalous things, and I was like, I have to get these out there somewhere. So Big Four Confessions was just like a whole different idea of getting out those, kind of scandalous stories and out there.
That's the stuff that's the most relatable, I think, to most people in accounting, is they want to have the relatable humor of some shared miserable experience typically, or I feel like people, doesn't matter which firm you worked at, if you worked at any public accounting firm, you have those same relatability moments from the audit room to if you were working on the tax side. So I want to talk about like a little bit of your background. Tell me about yourself, right? And we could start outside the accounting space to begin with, just like you as a person, who are you? Let people get familiar.
Yeah, I'm a person behind the memes. So I am an accountant. I am a CPA. I worked at Deloitte for 5 years, a few years in audit, a few years in M&A due diligence. And then I went over to a big media company that was like really heavy in acquisitions, and I did a M&A accounting and was basically doing financial reporting for all of the Americas, North and South America, and loved the M&A side of things, but then decided I wanted to try out the startup world. And almost 5 years ago, I joined a startup called SimpleBet. It's a tech B2B startup. We basically license our technology to sports books like DraftKings or FanDuel, for example. And it allows you to bet on any moment in any sporting event. Like if the next pitch is going to be like a strike or a ball or whatever, it like refreshes the odds for that, every second, and it creates all these betting opportunities that are limitless. And instead of who would just like win or lose a game, you can bet on anything. So really cool, innovative technology. And I joined as one of the early accountants there, and I helped build out the accounting and finance department and function, FP&A, month-end close, just building everything out and hiring a team, and taking us from a Series B company to now we actually just announced that we signed a deal with DraftKings. Very cool. We're getting acquired. It's public. It's out there, and we're really excited. And it's a success story. It's what I wanted out of a startup. You want to go through a sale. So this is really exciting.
How many people were at the company when you started, and how big was the accounting team?
It was one. I guess I was two.
Okay.
We were about 30 employees when I joined. Now we're 100 employees plus like 250 contractors. So like 350 people total. We're just a huge company now. We've seen a lot of growth. I joined pre-revenue. We were just an idea, like $0 in revenue, and now like we've grown to be so much bigger, and I'm really proud of where we've gone. And yeah, it's great to see a startup work out because they don't all. So it was good.
Yeah, it's all different routes. Some people are going for the merger. Some people are acquisition. Some people are looking to buy up other companies. Some people are looking to go public.
Yeah.
I've always wondered if there's a world where people are like, no, we just kind of want to be a good, profitable, for-profit company, right? It seems like in capitalism, that's not a thing, right?
Yeah.
It's either you're either growing or you're dying. There's no surviving. It's either getting bigger or you're dying out.
It's never enough. You always want to keep growing.
Yeah.
Yeah, that's America.
So, as far as like your role as senior director of finance and corporate development, like. How is that transition coming from public accounting into, well, obviously you said you had worked at another startup before that. I'm curious as to like what that transition was, and also like, or maybe even before that, what's the mindset that it takes? Because most accountants are kind of risk averse, right? You're not going to be taking the risk on a startup with only 30 people that you don't know if it's going to be successful or not.
Yeah.
Like, what was your due diligence process to be like, I'm going to go take this leap and go to a company where I'm going to be the first accountant, essentially?
You're right. Yeah, I am somewhat risk averse by nature. A lot of accountants are. It was different because at Deloitte everything's so structured. It's such a big company, and you're auditing companies, but you're not in there doing the journal entries. You're not working in the software that's at a corporation. So I think the biggest learning curve for me when joining a startup was like being like, okay, I know my debits and credits. I know how to audit this, but like, how do I book this journal entry? Like, how do I, do the ins and outs of the day to day? And I figured it out. And I think Deloitte, Big Four, public accounting in general, teaches you those tools. But I had to work in an industry and really like know what the day to day was like. And I think I learned so much from coming in at this early stage startup, building out accounting and finance and scaling it to where it is now. Like I've learned, I feel like I've doubled my accounting brain from these past 5 years.
Was it a lot of like learning on the fly? Because I know like if I was to come from, like I said, from public, which is I was at Grant Thornton. I came from the audit route. What did you come from? Were you in
I
audit
was
as well?
audit, and then I did M&A due diligence.
Okay, sure. So so you're able to kind of see the little. Well, now it's funny that you're now in the merger and acquisition stage right there. Yeah. I wouldn't have any idea how to actually make a journal entry, how to use any of the software that I'm auditing, and then I'm reviewing journal entries. I'm seeing what other people did, but I have no idea how to actually input that. So how much of it was just like learning on the fly, on the spot of like, well, I have to figure this out because I know I have to close the books. I know I have to book this journal entry.
Yeah.
I could do it in on a piece of paper on a test, but how do you actually do it in?
Let's just say I watched a lot of YouTube videos, like a lot of like how to use NetSuite 101, because like that's what we had, and I was like, okay, great. I'm the I'm like the only person at the time like that was in like had to book the journal entries. I'm like, what did I get myself into? I don't I had to train myself essentially. I watched a lot of YouTube videos, and you just figure it out. Trial and error. It's actually really easy. Like once you get through one month in, I built out month end close using my audit brain. I was like, okay, well, I need a fixed asset rec. Let me build one.
Sure.
And I just like built one. I was like, we don't have. So you kind of just figure out what's missing based off your audit background, what kind of balance sheet recs you need, and I just figured out what was missing, built them, and tried to just make it better and better every month.
I think it's a testament to the ability of accountants, especially, again, I talk highly of auditing, and I do that because you have to go in and quickly learn a new language. It's whatever that business's language is, right? And obviously you have the fundamental basis, which is accounting, which is the language of business, but you have to then go and familiarize with the culture, right? And the culture being the operations of that business, that industry, how they operate, what makes them efficient, what makes them effective, where they're getting their revenue, where they're finding their expenses, and just all the different ways that they have accounting operations. And for that reason, I think that those who have that audit and public accounting experience are able to pull on that and apply it to anything. Like I think you can do any job, and you don't have to know what it is. It's giving you the framework to apply to any role in any function at any company.
Yeah, that's exactly right. It's really like teaches you the sink or swim mentality. Like I could have been in there and been like, I don't know how to do this. Like this isn't right for me. But no, you just you figure it out. You bounce around on enough clients in different industries and public accounting, and you just learn how to adapt with the unknown, and the unknown it just becomes more comfortable the more you face it.
Yeah. So touching on Simplebet a little bit, I want to just understand, like, where were they was that the first, I don't know if you have this knowledge, was that the first of doing like real-time sports betting, or was there another competitor that already had existed?
We're a one of a kind technology.
Yeah.
I mean, to be able to bet on every second of every game is, I mean, people have tried to do it.
Yeah.
But we were early starters, so we were there at the right time when the federal ban for sports betting was lifted, and now it's a state by state regulation process. And as states legalize sports betting, it creates new revenue opportunities to launch in certain states. But we were the very first technology company to do this, and hired a ton of engineers to build this technology.
Yeah.
And it's proven it works. So
Now this might be getting too into the weeds, but like, because I'm thinking of, I've always thought, like, if I'm at a sports game, maybe I can live bet it while I'm there seeing it happen, because it always seems that the odds move right before something else happens, and I'm like, it's like they're seeing the future. It's like they already know. And obviously, like, there's a freeze frame period where it's like when the pitch is about to be thrown, you can't, like, bets are like, it's kind of the old on the roulette table. It's like no more bets.
Yeah.
And then they wait for the pitch to happen, because if I'm the first one that sees from the crack of the bat, like, that's going to be a home run, I'm like hammering them to win the game or something like that. How are they getting real-time data like that?
It's like that exactly was one of the biggest challenges was solving the latency issue. But I mean, the data's coming in faster. Our technology works really fast, and I mean, it's just not. I'm not the tech wizard to say how we solved it exactly, but like, you can't do that anymore.
Yeah.
You can't take advantage of it.
Too
fast.
I imagine there's probably some company that is the one that's capturing the data that then you guys are able to quickly turn it into, because I'm always like, is there somebody at the game that's literally like, okay, this just happened, pause, and it's just, I mean, that's so impressive.
You got it. Yeah, that data's collected,
Yeah.
at each game, and it needs to be kind of streamlined so it can be put into this model that's then put into the sports books.
So were you ever interested in sports betting before starting the company?
Is it bad if I say no? I mean, I just thought it was a really cool technology, and I love disruptors in industries. So I just, like, as soon as I heard about this product, I don't bet on sports. It's not really like my thing. I am risk averse. I am an accountant after all. But I saw this product and I saw this opportunity, and sports betting like starting to get legalized, and I was like, this is a cool place to be in. But it is risky to join a startup early on. You don't know what's going to happen. So to your question on due diligence, I had to really think about it. Am I willing to take this risk? And I think for anyone who's considering joining a startup, you want to figure out, like, what's the equity? What's the base? What's the, like, you need to get some kind of incentive to balance the risk versus reward.
So does it fall on you when, like, new regulations and compliance sort of come? Because I feel like with sports betting becoming such a popularized activity, I mean, it's almost like the government, those are the regulators are kind of like constantly trying to keep up with all of the new stuff. I mean, AI and technology is one whole thing. Crypto is another area where, like, I mean, what do you even focus on if you're a regulator of, like, we have to kind of get in front of this and how we update accounting policies? Has there been evolving accounting policies and regulations and standards when it comes to this sort of realm?
Yeah, there is a lot of regulations, and it depends on the state that you're in. Luckily, we have, like, a full-time person at my company whose like job is to, like, keep up with those regulations and the licensing and everything like that. But yeah, and I think it's a lot more for the actual sports books too, who are actually accepting the wagers. We're B2B, so we're kind of one step away, which helps. So
sure. And then is there compliance, like, issues or something? Like, who does compliance fall on? Because that's always, like, an interesting thing. I would imagine if you have some, like, there's definitely got to be some internal control way that you can. I mean, I'm thinking of, like, the potential fraud that you could do if you were able to get real-time data about what's happening in sports. And whenever you get gambling involved, it's always a big thing, of course. So where does the compliance function fall?
Yeah, I mean, we have a very clear, like, betting policy. Like, you cannot bet on bet on anywhere where our algorithm plugs in, and we know which sports books we're running off of. So it's a very clear policy.
Sure. And then what about, like, as far as, like, reporting on the compliance standards to show that you are following these sorts of controls. Does that, like, who does that fall on? Do you have a compliance department that is in charge of that, or does that fall within accounting?
That kind of falls with the legal, the licensing person who does the state by state regulations. I think we're still a startup by nature. We're still a small company on the grand scheme of things, and we're not an actual sports book.
Yep.
But like DraftKings, I'm sure they have their own huge compliance department and all of that. I think it's a lot more regulated for them, especially being a public company.
Yeah, that's cool. Well, we'll talk about the stuff that continues on, of course, maintaining compliance and regulations and reporting. So this is an article which is from Tech Magazine. It's Super Micro shares plunged 33% as an auditor resigns after raising concerns months earlier. This auditor, of course, is Ernst & Young. For those who are not familiar, Supermicro makes computers that companies use as servers for websites, data storage, and other applications, including artificial intelligence algorithms. Companies' customers include major players in the AI space like NVIDIA, AMD, and Intel. EY resigned following months of disagreement with the firm over its governance and board independence. Ernst & Young, in its resignation letter, said it was unwilling to be associated with the financial statements prepared by management. The accountancy also raised concerns about the board's independence from CEO Charles Lang and other members of management. EY was only hired for the first time for this in 2024, and they weren't even able to get that sort of sign off. It's just a wild story, the fact that this happened.
Yeah, all I can say is ouch. I don't know what like kind of sketchy stuff is going on at that company, but for EY to walk away from a client, they must be doing some weird stuff.
This always makes me interested in the notion of, like, they're talking about the independence of the board from the CEO, because obviously the board is picking the CEO, and it's always like, what's the motive behind the people who are on the board and versus what the president is. And I think there's always like a little bit of a disconnect between ownership and management.
Yeah.
That's where you talk about like incentives for hitting performance goals. And obviously you want to incentivize people to perform better. However, you want to incentivize them to do that in like a true way. A lot of the times that's where you have financial fraud that arises because people try to manipulate it to make it appear like they hit the performance goals, but they're not actually doing it.
Yeah.
Which is counterintuitive to the goal of setting the incentive in the first place.
Yeah.
I don't know if there's like a clean and easy cure to that, and how to resolve the two. How do you reconcile this notion of like, if you are the board and you're putting in place somebody, you obviously have a relationship to them, and I mean, I don't have a good answer.
And is anybody on the board like investors in the company or investors in any of the CEO's other initiatives or whatever? Like, it's always related parties is like, it can get sketchy. Yeah. Sounds like they had some weird stuff going on.
Well, I think that was always, I remember in the audit day sending out the letters like arm's length.
Arm's length transaction.
Right. Because it is one of those things which is interesting, and it seems like this happens more and more often, where you're able to put a company that kind of skims along. You almost create your own ecosystem, right?
Yeah.
If I'm an investor and I own this company and I have them buy from that company, that makes them, they're now using that service, and I'm showing revenue here, and then they have another company that they buy from, and then you create like a little triangle, and everybody's got this higher revenue, but it's all you just doing it to yourself.
Yeah.
So you're net zero out of the whole entire thing,
yeah.
But each company looks like it has this higher revenue, which then means, oh, well, you're worth more, you can get more investment money, or you can tout it. So it is really difficult to distinguish the difference between like what's smoke and mirrors and what is like actual pure, like, no, this is a good business model, what we're doing is effective, like these performance incentives are actually achieving the performance that we're looking for.
Yeah.
We're getting everything that we want out of the management, and they are actually accomplishing like real goals.
Yeah.
And not hyping themselves up.
Oh yeah. Yeah, it's definitely a gray area. I can't imagine what was going on there that caused UI to walk away from a client.
So do you guys have auditors?
Yes.
And what's your relationship like with the auditors, like coming from audit, and obviously you're on the other side now?
Gosh, I'm an overachiever by nature. The auditors always tell me like, we have the cleanest books, we're the easiest client. It's because like it's my audit background. I like making things easy for them because it makes it easy for me. So like I almost tie out the workbooks before I send to them.
Yeah.
And Yeah, I mean, I think they appreciate this. So I have a great relationship with our auditors.
Right.
Yeah.
That's good. I mean, because it's there's two ways people go about it. They
Yeah.
leave public and they're like, oh, I'm gonna make their life hell. Like I had to go through hell, and I'm gonna make it hell for you. Or on the flip side, you're like, oh, actually, I know I've been there. I want to make this super smooth and super easy because I know what it's like to be on that side.
The thing is, if you make your life hell, like I could go down that route, but then eventually my life becomes hell
Right.
because I'm working up against a deadline. Like I need this audit done by X date, and if I'm holding it up because I want to like annoy the auditors,
Right.
I'm not going to win there.
Right.
I need the audit done by a certain date. I don't know. Maybe it's just like the overachiever / ex-auditor in me. I want everything to go smoothly.
Yeah. Well, I think that's why there is a lot of value in companies having former auditors be in the position of whether it's the controller or whoever's handling the audit when it comes in.
Yeah.
And I mean, I remember so many managers from when I worked at GT that went and became assistant controllers or controllers at assorted clients of ours because they were just so familiar with it, and you knew as soon as you brought them in, that immediately was going to have a payoff in making it more efficient because they know every work paper, every test, what you're going to need, what you're going to look for, and what would make that life easy. Is like if the roll forward is already formatted in a way that makes it super easy for me to put that into my work paper, using yours as the basis, then that could shave days off of the audit time.
Totally. And I'm always thinking through things from like my audit hat still to this day. Like if a contract changes and someone from our commercial team's like, oh, I need to, the contract is changing in this way. And I'm like, okay, well, did you get an amendment? Like we need to have like things in writing. Like the auditors are going to ask for this. So I'm constantly just trying to like think now, okay, the audit's going to be 6 months from now, but I need to, make sure everything's teed out throughout the year so that we don't run into an issue later on. So it's like that's when the former audit experience comes in handy.
Well, I always say you could take the kid out of audit, but you can't take audit out of the kid.
No.
And that's what I relate to. So EY actually they flagged issues with Supermicro's internal financial controls, governance, and forthcomingness that was over the summer, which prompted a server firm to appoint a special board committee to investigate the company's internal controls. The company hired a law firm, interestingly enough, Cooley, and a forensic accounting firm to review the internal controls, and the review remains ongoing, the company said in a recent regulatory filing. So we'll see how this actually plays out. But I mean, this is like a big player in this space to be basically like, regardless of what the outcome is and everything is all right, like to have a Big Four auditor be like, we're not comfortable issuing financials because there's just too many cooks in the kitchen here at the highest level of a company. You'd think is concerning, but I guess at the end of the day, it's how effective is the business still operating, of whether, because you think, okay, well, that would tank any company off the bat. But in this tech space, when there's very limited high quality talent and there's very few producers of whether it's chips or whether it's the technology or the software, they have somewhat leverage more than I think they used to be back in the day.
And I wonder how much EY saw like the writing on the wall and wanted to disassociate from some upcoming scandal.
I mean, think about it. If you learn anything from like an FTX situation or
Enron,
any of those that have happened over like recent times, you're like, if anything is somewhat alarming, it's not worth the risk. I don't care how much the audit fee is. It's not worth the risk.
Otherwise I'll make memes about you. So good job disconnecting yourself, EY.
Heroes. So last part here on this FinTech 411 update is an interesting article from LinkedIn, actually, which is workers saying no to promotions. And as far as traditional 20th century American dreams go, the big promotion was what everybody used to work for, behind a new house and getting a Cadillac. But according to a recent Randstad survey, 42% of Americans now say they don't want a promotion. Do you think this is just Gen Z feeling apathetic towards working? Are people just not motivated anymore? What would be your initial gut reaction to hearing that?
I have a lot of respect for Gen Z coming in and saying, like, setting boundaries. I feel like I wish I had done that more. I wish that we had kind of had that attitude just a little bit more in public accounting. I think there was a point where a lot of us were being totally taken advantage of, and we were not making a lot of money, and we were working crazy hours, and why why. Like I feel like there's a happy medium somewhere in there. Like there's a balance between working really hard and trying to get that promotion, but like also you could be getting taken advantage of. So I think somewhere in the middle is the right answer. I like, you know, I don't want to be like, I don't think being lazy is the right answer, but you know, having healthy boundaries is a good point. And I think that that's a good learning from knowing how to say no.
Right. I also think that there's a value in each person's ambition, right?
Yeah.
And if everybody, I always say this, if everybody was the most ambitious, if what I was telling everybody to be like, well, don't you want more? Don't you want more out of life? Like, why don't you want to, I only want to rep my own clothing brand, and everybody starts a clothing brand and everybody's only repping their own clothing brand and nobody's buying anybody else's clothing. And then you got a bunch of people just all out for themselves. You need consumers, you need producers, you need givers, you need takers, and there's got to be a balance of, I think, all of it. And you need people who are going to want to go push the needle, like drive innovation, try to accomplish more, gun for the promotion. And, you know, obviously you want healthy competition for that promotion, but you don't mind there being some people that are like, not really interested in that. I kind of like what I'm doing.
Yeah.
And if you treat me well and you treat me fairly and you give me a good work-life balance, I'm happy just doing this thing that I'm doing. I'm happy with the pay I'm getting. I'm happy with my lifestyle.
Yeah.
I don't need the corner office. And I think that's sort of what they're talking about here. And I'm not sure whether this trend is going to be for forever or if it's just I mean, we went through the Great Resignation. Now we're in the Great Stay, apparently, where everybody's not leaving their jobs for the most part, whereas typically before everybody was leaving like hotcakes. Now they've got the roles that they want, apparently, and now they're saying, well, I don't even want the promotion now that I'm there. Like, I'm good. I got comfortable, and now I'm fine with that. And I think at the end of the day, there's a right balance of you do probably need more people who are like this.
Yeah.
And there's no reason to force somebody to be like, well, don't you want the promotion? It's like, well, if you don't, and you don't want to be a manager, you don't want to be a leader, you just want to do the job that's in front of you, there's no problem with that.
I think there's I think you're exactly right. And there's something nice about just enjoying life. Like if you're just comfortable with your 40-hour weeks and you're happy and you know that's all you want, then like I fully respect that. Like I kind of wish I was content with like, I don't know, I just like, I don't know. I want to be a CFO. Like that's I just like cannot let go of that. But you're right. Not everyone can be a CFO. Like we gotta, everybody's important. We need all levels.
Sure. And even still, once you get to CFO, maybe you're like, I really like this company that I'm at, and I kind of just want to.
That's true.
I'm happy with where I'm at, and I'm good with this, and you can kind of keep rolling with it. So according to Business Insider, greater autonomy and a belief that one's work is meaningful can be potent motivators for those who no longer aspire to corner offices. So it all comes back down to what is somebody's primary motivator.
Yeah.
And if you could just, as a leader, if you tap into what their primary motivator is and you use that as the leverage, some people want the title, some people want the pay, some people want the corner office, some people just want autonomy and be able to go, run with the project.
Yeah.
Figure out what that is and use that to drive and motivate employees, and it's a win for everybody because everybody finds their spot.
That's a good point. Yeah, different things don't motivate different people.
So, thinking of bullish or bearish, which is one of the sections where we talk about how quickly or how bullish we are on a topic or how bearish we are. And this is the ongoing conversation, which has been, I feel like, for the last year or two, especially since AI came on the scene. And we've had machine learning, we've had robotic process automation for a while now, but it's really taken the forefront of automation. How do we automate as many things as possible, especially when there's so many tedious tasks, there's so many repetitive tasks. Automating accounting is a hot topic. And so my question would be, this is from Accounting Today. The title was, Will Accounting Be Automated? Yes, but it makes the job more interesting. So you bullish on the notion of accounting being primarily automated?
I'm 100% bullish. I will die on this hill.
Yeah. How have you integrated that into like what you do at work? Is it constantly just evaluating new software, or is it building it yourself, or like what's your automation journey look like?
It's a necessity for our accounting department because it just takes the amount of work we have to do and cuts it in half when you have really good automation, which means that I can focus on solving bigger issues. Like I have more time on my hands. My whole team has more time on our hands to make other things more efficient because we've automated so many transactions. Like, there's no reason I should be manually coding every credit card, spend in our company to each GL account and department. Like, there's no reason anybody should be doing that. Like, it's really, in this day and age, there's so much smart software out there that it's just a miss to not be taking advantage of it.
Do you have peers in the space that are like not taking advantage of it? Because I'm always like curious, when I talk to my friends, like who's up to date on trends and who's kind of behind, and they're just sort of chalking it in.
Yeah. I definitely know people who are not taking advantage of this. And then every month for a month-end close, they're manually coding things to GL accounts and uploading it to their accounting software. And I can't relate. I can't.
Are they complaining about it too?
Yeah. I mean, a lot of times companies, it's like you have the struggle with budgeting or getting the spend. It might be management issues of not wanting to invest in something. But like, I promise you, if you are making these decisions, it is worth the investment to get really good automated software like FloQast. Like, there's so many things out there that can make your life easier.
Yeah. So, I mean, the article goes on to talk about, and this is from Thomas Reuters, complete the work faster, like you said, streamline data entry, ensure data integrity, easily file advanced returns, improve firm value. And I think the part that it gets at is, obviously will accounting be automated? We're heading in that direction. If you're not, then your life's going to be miserable. You're going to fall behind. You're going to be less efficient. And at some point, you're going to be forced to be like, we need to make a change because we're just... we're hemorrhaging money here by just doing things the old way, as everybody's kind of lapping us and becoming more efficient. If you can cut your audit's time in half, or you can cut the cost of it in half, or you can free up a bunch of your team's time and they can work on something different, that's important. But I think what's interesting is actually the part about how it can make the job more interesting, because if you're not caught up and tied up doing that just month over month and you're just busy with this, then you have time to come be on a podcast, right? If you set up efficiently your systems in place, you have the ability to do that. You have the ability to research other software that could potentially make the company more efficient beyond just the scope of like what you're doing on a day-to-day basis. You can take on a merger and acquisition project, right? Because this is a big move. It's a strategic move that a company needs to make, and you're not caught up doing all of this old month-end close, process and just any tedious task that's just repetitive.
Yeah, I think this is good news for any accountant. And I know there's arguments like, oh, it could take away staff accountants' jobs. No, it allows staff accountants to learn more and get exposed to more complex areas. Like, I think this is amazing for everybody. But I will caveat it that you get out of it what you put into it. It's like garbage in, garbage out. If you're implementing a software, but you don't put the time into it to properly integrate it with your accounting software, it probably won't work effectively. So it is important to be selective about which automation tools you use.
Yeah, you have to be dedicated to deciding we are going to go through and we're going to make this happen and we're committed to it, because that's how you end up with a bunch of software that just sits, you don't use it, then you try to use it but you haven't really learned it, so then it's more confusing and now you're doing double the work essentially. It's counteractive. But the goal is if you put that upfront energy in to just get everything set up, then it's not that, oh, it's going to take staff accountants' jobs. I mean, it's going to do the stuff that the staff accountants don't want to do, and it incentivizes you. Like I said, it makes the job more interesting. People don't become accountants because they think the job's not interesting. But if you take the uninteresting, there's plenty of uninteresting stuff, right? And that's just the tedious stuff. It's not that it's not interesting. It's just kind of repetitive and boring. So if you get rid of that and have it still getting done, then you can work on more interesting stuff.
Totally.
Which is the reason why you major in accounting in the first place, because it's the cool stuff you're reading about in textbooks and getting involved with more complex transactions and situations and the different events.
And it's a good skill to have too. So like if you're a staff accountant and you get exposed to all these different types of software, and then you're interviewing for a new job and you say, oh, I automated half of month end close, like, you're getting hired. People want that skill set.
Right. And I think it's important to note, like, accounting is too complex to ever be fully automated, right? And that's almost with anything, is like there's very few things that can be fully automated. It always requires human-computer interaction, HCI. That was from my information studies.
Oh, there you go.
Pulling back on that, one fifth of a doctor. But it does give good opportunity for, like I said, working on the more interesting and the fun stuff. And people shouldn't be scared of like, oh, this is going to going to take over what I'm doing.
Yeah, embrace it. There will always be need for CPAs and
Yeah.
human judgment in there. That part of our job is not going away.
Right. Absolutely. So, thinking of ideals of accounting, we got business philosophy, which I love to talk about, because this is a good opportunity, I think, to gain like thought leadership insight from what somebody picks up on through their experience. And there's so many people who are young accountants who have only ever worked maybe in public, and you don't get the same mentorship that you would if you were to work directly one-on-one in a more apprentice type role of somebody at a private firm. And that's why I think a lot of firms have solid coaching programs. Like I had I had several mentors who, one was a coach, one was a mentor and a leader of the company. I was able to pull a lot of information from, but not everybody is afforded, I think, that luxury to have that. So I try to provide some information that's, this is a good insight as you're growing about in your career and you're maturing and evolving and developing. Like this would be a useful management tip or leadership tip. So one of the things which I'm curious about from your experience, coming from public and then working in private and then building out an accounting department essentially where you're designing it from scratch, what's been your evolution and like the difference you've seen in managing like a team? How did you build that out?
Yeah, I think I have to thank public accounting for this and being switched onto different teams and different clients. And I've worked for so many different bosses or managers at different points in my career. And I've always kind of like taken notes. How do they lead? What do I like from that? What do I not like from that? Because I knew I wanted to become a leader, and eventually I became a manager, and then I became a director, and now I'm a senior director. And, I've had different direct reports, and I try to be the leader that I wish I had, the mentor that I wish I had. So taking notes on your experience, the good and the bad, and I always say the quote, leaders develop other leaders. And I think my staff that report to me, they want to be a leader one day. They're not that Gen Z type, that just doesn't want to advance or anything. They want to be a leader one day, and I want that for them too. And I want to give the people the tools to also take those the good and the bad and figure out what kind of leader they want to be. So I try to be an open book and a resource that they can come to for anything that they need.
Do you have any like thought leadership that you've seen, or I feel like on Instagram there's always some sort of motivational insight or quote that's like, this is the one that's really been sticking with me lately, or I recently saw a reel or TikTok that has this management technique or strategy or something. Like has there been anything that's top of mind for you as of late?
Yeah, I think it is the leaders develop other leaders, like taking people under your wing. Like I'm not just going to get there overnight. My reports won't get there overnight. Like you really need to invest in your team. You get out of it what you put into it. And that's kind of my philosophy. Yeah,
one that I recently saw was the appreciation for like the managers who are kind of in the middle, who have to put on this front essentially. And again, it's not to be like deceitful, but there could be a whole bunch of BS that's going on above you that you have to kind of protect your team from. And you don't really have any ability to help them beyond just protecting them from what's going on. And I had a mentor at one of my past jobs who was extremely good at he wouldn't let, he knew that there was some toxicity above him, but he made sure that he absorbed all of that. And he's like, I'm paid a lot of money to take this, and I'll take the bullets, and I'll shield the people underneath me so that they didn't have to interact or experience any of that. So as far as they were concerned, it was a great job, and they were loving it. And I think that's one of the really special things that makes like a good leader a great leader.
Yeah, I think that's exactly right. I do the same thing. Like I'll shield them, or I'll take, if I have to work late, I'll work late. But I like want them to maintain their work-life balance.
Right.
Like, that's important. And where was I going?
That's one of the things that showcases, who. That's why some people don't want the promotion, right? Is like that's
you don't get shielded anymore.
Yeah, that's a responsibility.
You have to deal with the crap. Yeah.
And there's no shame in not wanting to deal with it, right? Like plenty of people would not want to. And I think that's one of the more admirable traits about Gen Z is they're not going to put up with it, right? I don't want to be just a Gen Z ripper here, you know what I mean? Like, because there's still plenty of talent. I mean, this is the new groom in the crop in the workforce actually, but what millennials sort of started with questioning what work-life balance needs to be, they've sort of completed that journey and decided, is this something I'm interested in and care about enough? And companies, I think, are now stepping up to answer the call of being like, it is on us. And I was thinking about this. If you're on your way, or you say you need to go to work and you go to get in your car and you have a flat tire and now you're stuck there, you have, and say you have to get into the office or whatever it is, or now you have something later, you need to get the car tire fixed, but you have like a meeting you're supposed to get into, and now you're either going to be late for the meeting or your car's not going to get fixed. Is it on you to have to go now, be like, well, I got to pay for an Uber to get in there, and now that's like eating away at your cost, or does the company sort of body it and say, we care about our people and this is an unfortunate circumstance, and it's almost like having like the rich friend that's like, I'll cover this, right? I think it's going to be interesting to see how companies evolve and adapt to just being the reliable friend to a lot of their employees. Yeah,
I mean, it's a balance, and like, I don't want to be negative, but I think it's like a balance of whatever's going on in the economy. Like, we've been in this shift where employees have had the power and we've been able to work remote, but like, I kind of feel like some of that power is shifting. It depends on the economy. If we go into like a recession and things fall apart, then the employers have the power again. And if they want us in the office, it's like, well, you need a job. You know, I don't know what the trend is going to be, but I am pro flexibility, like especially in the accounting world. Yeah, I can do accounting from home. Right. Let's be real.
And I think I think overall there has been that shift to flexibility, which is awesome, and that's one of the things I appreciate about companies that have flexible work arrangement policies. Is there's 100% value in going to the office and having mentorship and having human interaction. There's also 100% value in being able to be remote as needed and to experience the world and travel. And you know, if you can go on a month sabbatical and work while you're exploring the world or something, like, then more power to you, and that's terrific. And as long as your work doesn't slack, that's great. But it's really, at the end of the day, just the flexibility. I don't mind. I could work a month straight in the office and then go a month, you know, roaming around, and it doesn't have to be one way or the other. And I think understanding that, like, you don't have to have a set one way is the only way playbook. Like, you could just be able to adapt and flex to the situation, to the environment, to the person, to the role, to the job. Every single thing is so unique and so individualized. And I think social media actually brings this out of us because we have an algorithm that's catered to us specifically, right? Like, you're getting fed content that is made just for you. It's not made for anybody else. Somebody else can look at your feed and be like, I'm not interested in any of this. And it could be all interesting to you and just you. And even somebody who's similar could be like still slightly different. They're going to have something that's a little more catered to them. And I think that's one example of like how we see it in a totally unrelated world. Yeah. But in general, we're living in a more like individualized, custom experience world. I mean, fast fashion, I think, is on the way out. People want things that are just, it's a good quality piece that's unique to them. Yeah. The one of one movement, where I just want the only one of this thing, and that makes it special. Even with gift giving, like, you don't want to just have, oh, I got you the same thing that I bought everybody else. It's like, I'd rather have you make me something that's special. I'm the only one that has it, like Etsy stuff, which is uniquely made. So I think we're living in an increasingly customized world, and it only makes sense that business policies kind of follow suit.
Oh, that's such a good point. Yeah, it's like personalized healthcare is like the whole big thing. Okay, well, now it's personalized work-employee relationships. Like, flexibility is spot on. Like, that's key. So hopefully companies are paying attention to that. That's what we want.
I think the good ones are, and the good ones will. And there's always going to be some ideas that perhaps are just so valuable and so good that, I mean, it's the same reason that a lot of the times Big Four has a lot of leverage, because you want to have the name that's associated with it. And it depends on, of course, what the competition's like, where if there becomes a shift where people are starting to value a different brand name more,
Yeah.
then suddenly, you know, that would force the hand of being like, okay, now we have to actually change.
Yeah.
But again, every situation is going to be unique.
It's true, yeah, and I know I rip on Big Four and, you know, the experience there a lot through my memes and everything, but I don't regret it. It's nice having like that public accounting experience on our resume. It made us who we
100%.
are today.
I just had a spotlight interview with Grant Thornton where they did a little interview on alumni and see where they are right now.
Yeah, cool.
And then I had a networking event here in the city with the Grant Thornton alumni group and just seeing where everybody's at. And it's cool because it's almost like a college reunion. And you have
Yeah.
that experience. And I felt like public was very much so like going to college, which was cool.
Yeah, I totally see that.
So talking about social media, though, and this section, somewhat, you know, right in your domain, make meme. Well, I used to be accounting for memes, which do you remember what the very first accounting meme?
Yes.
How should we account
How
for
should
me?
we account for me? Wow, we're aging ourselves.
Yeah.
Yeah, the original accounting memes before.
Right.
Was Instagram even a thing then?
I don't think so. I mean, it was right around the dawn of it. I mean,
2014
a
or something
website.
like that. I don't know.
And it was a lot of GIFs, really. I think that
Yeah.
was like the original. It was just clips from shows, and they just wrote a little header on top of
the
it.
original memes. I wonder who that person is. We
Yeah.
should get them on your podcast.
I would love to know who that is. If anybody has any
Raise your
idea,
hand.
if anybody has any idea who, how should we account for me is,
The
I mean,
OG.
that was the OG.
Yeah.
That was the first accounting content, really.
They inspired
Yeah.
us all.
Really cool. So, what do you think the future is of it? Because I wanna get to looking at some of our favorite memes over the course of time. But like, are we evolving past that where like the trends are now people want to see the videos, they don't really want the images anymore? Is it more captions on full screen versus, you know, you have your white top and bottom? I mean, what are you seeing?
Yeah, I think you have to look at it from the creator's perspective. So if you're the person making this content, you want the most eyes that you can get on it. And a lot of times Instagram or TikTok, they push the algorithm with a certain type of feed, and like we started seeing that videos were getting more views than static images. So I think creators almost adapt to what's being pushed more and getting more eyes, which is natural. And now it's like everybody's doing videos, and having reels and TikToks being like the next big thing too is like, it's almost like you have your video memes, but then also now you have these TikToks with like the dancing little images.
Yeah.
And you know, it's evolving, and I don't see as much static. I don't make as much static anymore. Yeah.
It's going to be interesting, I think, to see how it evolves, because it is one of those things as well where just like the format and the notion of just like a caption and then something to relate to it,
Yeah.
that seems to thematically be something that still withstands time, where it's like, I don't know, I think of like a parody pharmacy commercial is never not going to be funny. Whenever
Yeah.
like they have any like parody commercial about like a fake drug, right? And then they list all the
Yeah.
side effects or something like, and or there's so many different, like, are you struggling to find work and feeling down? Have you tried public accounting? Right? Like, I don't know, I just made it up right now, right? You know?
That's a good one. You
Right?
should-
You know? But it's like, it's funny every single time.
Yeah.
And I think that would,
classic.
right? You know, and so I think something about like just the meme format in general, regardless of what like the creative element is in it,
Yeah.
whether it's a video with the on-screen caption or a caption above it and the video below it or an image below it. I mean, obviously, I think the video is now just the engagement more interactive, but just
Yeah.
this format of here's a relatable sentence, here's something that's not related but totally relates to what was written.
Yeah.
Taken completely out of context. That's just a repeatable format that people still like, and
Yeah.
they like it every single time it happens.
It's all like a different type of art. It's a different type of medium or whatever. Like
Yeah.
it's a classic. And I guess if the algorithm started pushing static memes, I think we'd go back
Yeah,
to
we would
those.
go
So
to
it's
it.
really all in Instagram and TikTok's hands.
Yeah. And I think a lot of what the algorithm changes is based on what people react to and respond to.
Yeah, it's
so as
true.
soon as somebody made one where it was a looping video,
Yeah.
they're sharing with their friends. They're like, okay, let's feed some
Yeah.
more of these and see how they react. And
Yeah.
suddenly they become more engaging. It's like, oh, I'm sick of sending my friend the images. But there's still plenty of image-only accounts that they're in their carousels now at this point.
Oh, yeah.
Right? And you just kind of could scroll through and you could see a whole sequence of them. And
Yeah.
they're getting churned out so quickly, I think, because there's so many creators out there that, again, what I've just noticed is that they are still a thing. Like,
Yeah.
it's still a thing. It's not like we moved past it. Like, no, we want higher quality sketches. Like, no, the meme stuff still works.
Yeah.
It still works.
Yeah.
So I want to go through a couple memes with you here. We'll throw them up on the screen for people who are watching on YouTube. And We've got how long are you going to stay in public accounting? What's your long-term plan in the Big Four? Are you going to stay until partner? What's your long-term career goal? And what is this reference of?
I think it's just like, it goes, if I'm putting myself back in my shoes in public accounting, it's like this constant fork in the road. Do I stay till partner or do I go into industry? Because they kind of scare you. They're like, oh, if you go into industry, you're going to boomerang back. You'll be back or you're going to hate it. And, you kind of get scared. And so putting myself back in the shoes of how I was at a public accounting firm, it's like, okay, I'm just going to drink every time anyone asks me a question because I don't know what I want for my future.
Yeah.
It's like stressful and
that's like a good question.
Yeah, I don't know. I still like, I'm always like, am I making the right decision?
Yeah.
I don't know.
Well, we always have that.
Day by day.
I think here's the thing about social media is I think it always makes us question our decisions because you see every other possibility that's ever existed. And even if it's a one-off, it's like, should I be winning the lotto right now? I mean, why haven't I done that? Like maybe I should be working on winning the lotto.
Yeah.
And it's like, well, that odd is so immaterial.
Yeah.
That chance is below tolerable error.
Yeah. The grass is always greener. Like, could I have stayed and made partner? Would my life be better?
Right.
Like, I don't know.
Yeah.
Probably not.
Yeah, you always compare. But that's so true. So then this next one here we got, when you look back at your life and try to figure out at what point you decided becoming an accounting major was a good idea.
Existential doggo.
Oh my, is that what that meme is? The existential doggo
I just
meme?
made that up, but yeah.
That's a good name.
That's how I don't know. A lot of my memes are frankly depressing because like I said, it was an outlet for me, struggling with the public accounting hours and everything that comes with it. You're constantly questioning yourself, especially those early years when you don't know when it's going to pay off. You're like, I could get paid more working at McDonald's. Literally, if you divide it by like the number of hours you're working,
sure.
like it's not well. And then it's like I majored in accounting, but then investment banker people who majored in finance at that time, the first few years are making so much more, and we're working the same hours. So there's a lot of times that I kind of like had some regrets early on.
And I think I've spoken about this with Joey Reeves from Universal here about how like the profession just has like a bit of a branding issue.
Yes.
And part of it is like you see investment banking and it might seem like, oh, that's finance bro or whatever. But it's like, yeah, but they also still ball out. And there's a finance bro admiration almost where people are like, well, I want to be that or whatever.
Yeah.
So, I don't know if accounting bro is the way that we want to be branded per se, but there is something to be said about like how do you portray and how do you display it. And again, that's what I think every content that we're working on creating is how do you shift the narrative? How do you change what that stereotype looks like? And it's not easy and it's nobody's asking for it per se, but I think it's what the profession needs and there's no guarantee that it's going to work or pay off. But the only thing you can do is try.
Yeah, we need a rebranding. You've got two cool accountants here.
Yeah, so we're making it happen. So the last one from you here is my boss. Hey, I really need this ready for my review first thing tomorrow morning. Me at 11:50 p.m. with a little thumbs up cat cry.
You got it. I think that this kind of goes to like the people-pleasing tendencies that a lot of us have. In accounting, it's like we want to be those overachieving perfectionists. It kind of comes down to that risk-averse nature that a lot of us have. And I definitely have been this person for a lot of my career.
It is really interesting that we as accountants do typically try to like focus on being perfect, right? I was always like trying to get good grades. We didn't want to let anybody down. Like it wasn't an option. Letting down is not an option. Like missing a deadline was not an option. And I think because we have that mindset, some people just be like, didn't get it done. I'm like, aren't you worried about like getting in trouble? And they're like, no, what's going to happen or whatever. But we are like, no, I don't want to get in trouble. It's almost
I don't
like,
even want to know.
Yeah. So I don't want to find out what happens. And so we do try. And I think what's funny though about this is like the follow-up meme to this. And if this was a carousel, I feel like this is the next page is then it'd probably be something where it's like, hey, I got it to you. And they get it at 8 a.m. and then they don't open it for a week,
That's exactly what would happen.
And then it's
100%.
some sort of like it's probably use the same meme again. It's like when I find out that they didn't open it for a week later, you're like, yeah.
Great. This
Or
is awesome.
or the old senior citizen cup meme where the guy lifts up and he's like,
Oh, yeah, that guy.
Nah,
Oh, yeah.
That's how I feel.
Yeah.
So I'll wrap it up with these last two here. So this one is from me that I just made the other day. So I don't know if you followed baseball at all, but
oh yeah, I saw that.
Dodgers Yankees were in the World Series, and you have
Wild
this guy's
moment.
wild moment where these fans are ripping the ball out of Mookie Betts' glove. And I whipped this up while I saw it happen, and as soon as it happened, I pulled it up. And so you got Mookie, who's the staff auditor, who just discovered, which is the ball, a questionable accounting transaction. And then you've got the client ripping open the glove to get it out, the audit partner holding down his arm so that the client can rip it out, and you got the audit managers kind of like looking on because they're just kind of in the back. I was like, this is probably how Enron and Arthur Andersen went down. It's like, somebody discovers like, hey, I feel like this is a little kind of funky. Should we be doing this? And it's just like, no. Or you find something bad and it's like, we can't destroy this relationship. You can't ruin this relationship. This is a big client for us.
Yeah, it's totally the staff accountant who finds like that something fishy in their audit selections, and then they start extrapolating, and then there you go. Now everybody's involved.
Right. And I think like the seniors probably like, oh, we got to do more testing, and then they find another thing, and they're like, oh, more, and then they're like, I don't really know what to do here, and the manager's like, and then the partner's like, no, we can't let this happen. I don't know. Hopefully that doesn't really happen anymore, but I thought that was
that's
pretty
a good
funny.
one.
I was
That's
like,
relatable.
I was just like, I'm trying to get like, how can I whip these things up so quickly? And I saw that moment happen, and I was like, I got to make this
Epic moment.
And then the last thing I had here, which I thought was funny, and this is just a little friendly alert to everybody. Busy season, 75 days away.
Is it really 75 days away? Oh man.
Yeah. I mean, this is the Shohei Ohtani. Every single time you could be watching like a funeral procession on, and then out of the bottom corner of the TV screen, you'll just see a little image of Shohei Ohtani pop up, and they're like 3 hours away until Shohei Ohtani bats.
Oh,
because he's just like the
God.
biggest superstar in the league. So this is just like an ongoing thing, and I think people are going to have a lot of fun using this concept of just having him pop up in all situations.
That's funny. That's a good one.
There's a bunch of stuff going on online where they're like, this is getting out of hand. It's him popping up in the most unreal situations. So, yeah, I mean, speaking of busy season, I'll get to the concluding cycle here, which is here to wrap up the show. But when do you think busy season, like if you were to pick a date for when busy season starts, like for you, when does that actually start?
For me in my current job,
Yes.
well, I work for a private company. So April.
Okay.
Yeah.
So you got a little bit of time. I mean,
Well, now we're getting acquired,
Oh,
so
sure.
who knows when my busy season will be under a public company? Like,
Sure.
don't know. I
mean,
guess. I guess it'll be year round because there's gonna be quarterly
Sure.
reviews and 10Ks, 10Qs, so it's gonna be different.
but so you don't consider your January to April period to be as busy season heavy?
For my experience working in a private startup, no, because our public accounting firm will prioritize their public companies, audit them first, and then they'll staff the private people later because there's less of a push, like a deadline to get things done.
Okay. Yeah, I think obviously with public, it's typically going to run I say 75 because it's kind of the end of January. Like you got to wait for all the clients to get the books closed and even start to compile all the PBC items before you can actually start doing the busy season work. And then once it starts, it's like, it's a race and you're trying to get it all done.
Oh yeah, especially for public companies. I mean, I think on the audit side, your busy season almost never ends because like you audit those public companies, it's a race. And then they put you to audit private companies like where I'm at.
Right.
So then you still have to do that by a certain deadline.
Right.
And then they'll find somebody with a 6:30 or a 9:30 year
Yep.
end. I was on a never ending busy
That's
season.
funny.
So
So for some people, it's not any time away because it's already happening right now.
yeah.
So we'll see. But yeah, it's been great having you, Kristen. Thanks so much for popping on to the show. Everybody can give her a follow at Let's Get Fiscal if you don't already. Yeah, thanks so much. It's been awesome to chat with you here in New York and get your take on everything.
Yeah, thanks for having me, Drew. This has been awesome.
Cool. All right, everybody. Well, this has been episode 39 of the Fintech Flo, and we'll see you all next time. Thanks for checking out the Fintech Flo. As a reminder, this episode is available for CPE credit, and you can get that at FloCademy or on the Earmark app. Details are in the description below.